Good afternoon, welcome to GrainTV. My name is Cody Bills. This is Brock Shimano. Today is Wednesday the 19th, and we had the market selling off pretty sharply here today. Corn traded down 16 3/4, beans down 28 for that Jan contract. Wheat traded down 5 in Chicago and 2 in Kansas City. One of the reasons we did start selling off, in particularly for corn, was the ethanol production numbers and stocks numbers, and they came out, they were a bit disappointing. Plugging them into our models, maybe you could describe to us why it's so disappointing here and what our expectations are compared to the USDA.
We did get some more bearish numbers out of the ethanol industry. We saw production down another 2,000 barrels per day. We saw stocks up 800,000 barrels this week. We're sitting at about 21 million barrels of ethanol stocks. So that's getting to be a pretty large number in the grand scheme of things here. But if you take a look at the model we've been following all marketing year long, the red bars are what we are actually experiencing for daily production. The green line is the amount of production we need to see to meet our forecast of 4.4 billion bushels going to ethanol production, and the blue line is what we saw last year at this time for ethanol production. The concerning thing here is that we do need to achieve the green line on the daily production and be quite a bit above that green line to actually meet the USDA projections of 4.5 billion bushels going to to ethanol. So it's a little bit concerning that we're barely reaching our expectations right now, which are quite a bit lower than what the USDA has.
Yeah, exactly, and I think that's one of the reasons why why that sparked some of the selling here this morning. But I don't think it's fair to say that the ethanol numbers caused the whole thing. I think Informa coming out, that kind of threw gasoline on the fire. That continued the selling pressure, and they actually had a revised 2013 acreage forecast for corn that put their acreage numbers for corn up 1.3 million acres higher than their previous estimate, up to 99 million acres. That is absolutely huge, and I think that helped augment the selling that we saw here today. For beans, they actually revised it about 1.1 million acres lower here. They went from about 80 million acres previously down to 78.962 million acres, and that was, I think that would have helped support the market had the market have the market not been focusing so much on the short-term demand. Really, we have this South American crop that's going to be coming off here in the spring, and I think in terms of supply, we're going to have the supply, and I think that right now the market's focusing on demand, export sales, crush, all the short-term demand. That's really what's driving the market. I think these 2013 acreage numbers are still off, and really not weighing in on the market too much this morning. Brock, you were talking to me about some of the technical levels, particularly for corn. What are you watching there, and what would you advise producers?
I think the bearish fundamental news that we did get today in the corn market was really what started the selling, but I think it was accelerated by some of the technical selling. We were testing the 720 area over the last couple of sessions for the corn on the daily chart. We broke through that area when the ethanol numbers came out, and we continued to sell. We went down and actually broke through the low that we printed on September 28th. We went down and tested the $7 psychological support level. We ended up at 701.5 as a low today. So I'm kind of looking at this chart, Cody, on the daily chart, and if we break through the $7 level, I think the next area we need to be focused on is that gap that we left back during that rally last summer in the 680 to 690 area. So, if we break through $7 level, we could see a little bit more selling down, possibly to about the 680 level.
Yeah,
so.
Corn, it really looks a little bit dangerous right around these levels, and I think for wheat, it has the same kind of situation here. If you look at wheat, we went we've been trading right around that 200-day moving average. That has obviously stopped the selling that we observed on the 11th and the 12th after the WASDE report, and right now I think we're kind of hanging there right at $8, and we've tested it a few times. If we trade through $8, I wouldn't be surprised to see some impulses lower and some stop orders being triggered, and perhaps some trend following money come in and doing some selling down there. So just watch out for $8. I think that could really be a key battleground here. One of the things that we do need to pay attention to is export sales. The numbers are coming out tomorrow. Let me just run through the analyst expectations before we sign off here. For corn, we're looking at really anywhere between 250 and 550,000 metric tons. For wheat, 450 to 650,000 metric tons. And for soybeans, we're looking between 650 and 850,000 metric tons. To me, when I look at those analyst expectations, I think beans may be kind of setting up for a little bit of a disappointment, especially on the heels of the cancellations that we saw yesterday from China and from the unknown destination. So the bottom line here is export sales coming out tomorrow. That should weigh in on the market. We are hanging right on two key important levels for beans or for wheat and for corn. We'll just have to see. If you have any questions about what we talked about today, give us a call at 877-472-4607. Remember, we also offer a great trading platform, the platform we have up here. You can take a demo of that and have it in your home office. Just go to grainhedge.com, take a demo. Thanks a lot for tuning in. We'll see you tomorrow for the export sales report.